We have the last one. This is making up of conceptual framework. Small of everything. Conceptual framework, sustainability, giftness. What else? Giftness. There's a particular one. Governance. Governance. Okay. Governance. And audit in the public sector. Agbena. 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 Siga is under, I think, yes. Functions of public officers. Function of public officers. All this is 20 months. Think we are joking. But if you read my notes, you realize that I've summarized all of them for you. Can you see that? I've summarized all of them for you in the notes. That is where you get question 5A and question 5B. In my notes, they have conceptual framework to stand in somewhere. Ladies and gentlemen, in my notes, you get question 5A, question 5B. Automatically, when you do that, you have revised all this. All is in the notes. Check. Analysis of financial statements. I know by now, there's no one having issue with analysis of financial statements. Trust me, if you're having issue with financial statements, analysis of financial statements, then you're a lazy student. Sorry for saying that. But sometimes I have to annoy you. If you're having issue with analysis of financial statement, then you're a lazy student. Why am I saying it? Because you have failed to revise. Be revising over and over again. Are you okay? You have the PFM cycle and PEFA favorites. It's so simple, right? Preparation of financial statement, like an analysis, IPSAS. IPSAS, you have to be solving questions. Where can you get questions from? You can get questions from your financial reporting notes. It's the same as financial reporting standards. The same thing. That's all. This time around, PS, I've made it so simple for you. Last night, I gave them plenty notes. This night, everything is so simple for you. So simple. If you want to pass, you pass. Trust me. And some of you have already passed in advance. Especially those of you who are learning the notes seriously, you have passed. In Jesus' name, no one is going to fail. In Jesus' name. You understand? So please, this is to say, if you have not registered for the intervention, kindly do so now. Okay, don't wait till last minute. It's just 50 cedis for those who registered, those who have registered with me, and 100 cedis for new students. That's none. Those who didn't register with us for the match diet. Are you okay? Please, the numbers I have are not up to the over 300 students are registered. Please, make sure register. And I keep advising you, the best way to pass PSA is by solving more questions and learning the theories. You understand it? Solve more questions on the preparation of financial statements and learn the theories. Learn the theories and solve more questions. Be the best way to pass PSA. Good. So quickly, let's proceed. Question 2. Last time we did question 1. So in case you're not able to join the class, kindly watch the recorded video. We did this one. This question, we did it. And we saw new issues, right? Now let's go to question 2. So question 2. Government of Comunidad has adopted the approval basis of international public sector accounting standards as basis for preparing its financial statements. Below is the trial balance of the government of Comunidad for the fiscal year ended 1st December 2024. Now we have Property, plant, and equipment as at 1st January 2024. Infrastructure, 1st January 2024. Provision for depreciation. You see, what you see is that they are all 1st January, 1st January, 1st January. Ah, 1st January, 1st January, 1st January, 1st January, 1st January. Can you see that? 1st January, 1st January, 1st. What it means is that this is an opening balance. Opening balance. These are the balances in my balance sheet. They are all opening balances. Opening balances. And because we are preparing cash flow, what is cash flow statement? What is it measuring? Cash flow statement is a statement that shows us the total cash inflow and total cash flow for the period or for that particular year. You understand it? It is a statement that we prepare every year. So if you are giving me opening balances, it means that these balances are already existing. We didn't buy them for the current year. We didn't buy this for the current, this domestic debt. We didn't procure it in the current year. External debt, we didn't collect this external debt in the current year. In the current year, they didn't occur in the current year. So therefore, you do not have to account for it, or you do not have to include it in your cash flow for the current year. That is it. So it is here to confuse us. This is here to confuse us. This is here to confuse, because it is 1st January, 1st January, 1st January, 1st January, 1st January, 1st January, 1st January. Okay, good. So when it comes to this, you have financial assets. 1st January, it means it's already there. Accumulated fund, 1st January. But assuming they wrote financial assets without adding 1st January to it, then it means that we can, I believe you understand. That one, they didn't tell us that it was 1st January. So it means we bought it for the current year. Assuming they didn't add 1st January to it, then it means we bought it for the current year. Assuming they didn't add 1st January to property, plant, and equipment, then it means we bought the PPE in the current year. Two of us. Good. Are you okay? Perfect. So let's go. Corporate income tax, 38,000. Custom and excise duty, 43,000. Value added taxes, 45,000. Multilateral grant, 16,000. Income tax, 15,000. Fees and this. You understand? These are all what? Expenses that was what? Incurred. So required, prepare cash flow. Prepare cash flow. There's nothing difficult here. And I told you simple, right? So when you're preparing cash flow, you have three heads. You have operating activity. We have investing activity. We have the last one, financing activity. When you add the three activities together, add opening balance of cash to it. See, cash and cash balance at 31st December. So let me see. Which year financial statement are you preparing? Below the trial balance for the government of a premier day is year ended 31st December 2024. So this is the balance. This is the question will always give you the closing balance. Are you okay? This is a mistake. Let's make this one 2023. So this is the closing balance for last year. Hence, it will be the cash and cash balance opening for this year. So let's begin. Because of time, let us start. Cash flow, we finish right now. Okay, don't worry. For the cash flow, there's nothing difficult here. The principle is only one. We only treat transactions that are cash in a currency or full stop or cash related. So let's begin. Premiere. Good. So you say it's a pre-cash flow, is that also? So right. Consistent for the end of the first December 2024. Good. So that's true. From operating activity, million. Good. So please, the operating activity, what are the items and the operating activity? The operating activity are the same as the what? So workings. The same as statement of financial performance. Are you okay? So this question is talking about the government of Ecomiate has adopted accrual concept. So government. So let's look at the questions. You see, because it is government, what do you see? We see custom and income tax. Yes, you see custom. Look at the question. Income tax and others. So it means it is indeed what? Government, right? So central government. We can also. So our revenue will be what? Tax income. That is direct tax. Let me not just make it direct tax. But when I come here, tax income, non-tax income. But because we are learning for max, let's make it direct tax. Direct tax income, indirect tax income. Good. So please, in terms of mute you, assist me so that we do it fast. In case I make a mistake. Are you okay? So let's go. Direct tax. Where do we fall? Where do we post it to, please?
Hello, sir.
Yes, please.
Wait,
Can you zoom your board small?
This one, eh?
Yes, please, a question.
Okay. I believe it's okay. If I zoom it any further, you might not be able to see the figures.
Thank you very much.
You're welcome. So please, the corporate tax, where do you put it to?
Direct tax.
Okay, good. So corporate tax, fast, eh? Fast, 38,000. Custom and excise duty. Please, where do you put it to?
Indirect.
Value added tax. Please, where do you put it to?
Indirect.
Indirect.
Please, multilateral grants. Where do you put it to?
Grants and donors.
Multilateral 16,000. Income tax bracket pay as you earn. Where do you put it
Direct.
to?
Direct tax.
Please, fee and charges. Where do you put it to?
Non-tax.
Tax.
Yes. Thank you.
Non-tax.
Okay, good. You have bilateral grants.
Yeah,
Donation.
donors.
Donation and grant.
Okay, good. Fines and penalties.
Non-tax.
Oh, okay. It's rather 9,000, right? Good. Recoverables of loans and advances.
Investment.
Recoverable of loans and advances. It
Investment.
is going to the balance sheet, right? It's a balance sheet
Yes.
item. Is that not so?
Yes. Yes.
So, external borrowing,
Same.
domestic borrowing.
Same.
Okay, good. Thank you so much.
Balance
So I
sheet.
think we can proceed. External established post salaries. So here we now have
Compensation.
compensation.
Yeah.
So we have %13 SSF contribution for staff. This is contribution for staff. Is that also?
Yes.
So it means the non-established.
Non-established post.
Madam, say
Non-established post. You missed that.
Compensation.
non-established post. What about it? I didn't choose it.
Yes,
Yeah.
please.
After that, you can come back.
Okay, I've not taken this one. Yeah, it's
Yes.
true. All right. Non-established post is true. Okay, let me finish this. %13 SSF contribution, we've done that. Staff allowance.
Compensation.
Administrative cost.
Services.
Please, I believe you have been solving questions on your own. Preparation of financial statement. It is coming on. Admin expense. Payment for property, plant, and equipment. Balance sheet.
Balance sheet.
Payment for infrastructure during the year. Balance sheet, right?
Yes.
Repayment of external borrowing.
Balance sheet.
Loans and advances granted during
Balance
the year.
sheet.
Financial investment during the year.
Balance sheet.
Seminar and workshop.
Goods and services.
Training and capacity building.
Goods and services.
Foreign travel.
Goods and
Is what?
services.
Repair maintenance.
Goods and services.
Domestic interest paid.
No, balance sheet item.
External debt interest paid. Payment for subsidies on utilities.
The interest payment
Is it not
Interest.
will be part of the common.
Where's the interest payment?
Domestic
domestic
interest.
interest
The
paid?
interest.
Paid. Yes. So that one will go to interest. Is that
Interest.
also?
Yeah,
Yes,
the common.
interest.
Interest.
Yeah, but that's what he said. Who is saying otherwise?
Someone said balance.
Balance sheet as thing.
Don't
That's
want to
Sawara.
mention balance sheet.
Sawara, open your eyes for you see that we said it is coming to interest. Public interest. So public interest, and you are saying balance sheet. So domestic. So you see how simple IT is. Those of you who are roaming, moving from one platform to another platform, don't sit down and be reading your notes. Hey, students. Please sit down and learn a note too, I beg you. Don't be moving from one platform to another platform. If they have something to offer you, it's not last minute that they'll say, come for payment for subsidies on utilities.
Subsidies.
Payment for subsidies and utilities, so subsidies. The subsidy on utility, 12,000. Payment of subsidy on fuel, 6,000. Lively empowerment against poverty.
Social benefits.
Is that's what we call the leap? Is that also?
Yes.
Yeah.
Support for social protection against the widow.
Social benefits.
It makes sense, right? Statutory transfer. Statutory transfer. Fair. Statutory transfer is what?
Oh, yeah.
It's a line item.
So it's what?
Grant.
Grant.
Oh. It's a line item. It's understood.
And for the devil says to grant explanation.
Statutory. That should give you. So this one is called grant and transfer. Other expenses. Transfer. Mean legally binding transfer. You understand it? They are granting to your own. Okay, good. There you go. Please, with the calculators, let's do this. All of you, please, with your calculators. Trust me, I don't have the figures.
Say.
Yes, madam. Yes, madam.
The grants and donation grants and the other grants, can't we add them together? Because
If one
Let
is
me make it.
revenue, one is
Revenue.
expenditure.
Can I say that this is revenue and then this is expenditure grants? Are you okay?
Okay.
Let me put this one expenditure so that it will not confuse us. Perfect. So quickly add them for me, please. Indirect tax.
Other expenses
53,000.
12.
System again, one at a time, please.
Other expenses is 5,000, but you wrote 12,000. Please check.
It's
It's 12,000.
12,000.
The 5,000 as in bank.
Other expenses. 12,000. Please, yes, the 5,000 bank. Okay, good.
For staff, won't it be compensation?
Direct tax, please.
53,000. 53,000.
Please, what about this? Indirect tax.
88,000.
8,000.
Please, donors and grants.
39. No, the compensation is 39,000.
Please, the compensation, you have
Please,
missed
I
the
had the
note.
compensation. You didn't bring the
Compensation
non.
is 57.
You
57. Compensation
didn't bring the
57.
Compensation is 57.
non-established.
Oh, is
He
here?
bought it.
It's 20,000. Okay, so 57.
57.
57.
This is about this.
Goods and services, 52,000.
You get it. So we come here. Got the first one. Direct, indirect donors and grants, grant and donation. So let's go. So I have direct tax. You have indirect tax. Donors and grants. So all these are revenue. So they are all positive. Are you okay? 53,000,
No,
88,000.
Non-tax. Slow with non-tax.
Non-tax.
Yeah, no tax. Thank you. Tax. Grant and donation. I think that is good. So this is 53,000. This is 88,000. Oh, but frankly speaking, I like the way you guys are participating. It means you guys are learning. That's so good. Keep solving plenty questions. Why? And when it comes to the theory, always make sure you finish one lecture note. And the next day, when you go to the next day, in order for you to learn a new one, make sure you write the previous one. That's how you pass. So keep revising. Revision should be very key. Now, the various study groups, before you go to any calculation, revise one theory. That's how best you can help yourselves. Don't just be doing the calculation. No. Before you do calculation, at least take one lecture note and revise it. Revise it quickly. You told them this today we'll be revising this topic. Because in order for you to pass.
Sir,
Yes.
grant and donation is 28,000,
Okay.
not 26.
Over here,
Yes, sir. The grants and donors are 28,
28,000.
not 26.
So I interchange it.
Yes.
Monfanisa. What should you say? 5 years fanisa. Grant and donation. Goods and services 52,000.
Please, in brackets.
I'll do that. Yes. I want to explain that one. I'll do that. Okay. Subsidies 28,000. Interest for the guy. I don't tolerate them. If it's a lady, I'll respond nicely. For a guy, you have to be hard. Interest. You people are wicked. So me brain. Let me make a mistake right now. They will point it out. But me brain, nobody will say, "Oh, say Steven, the next one is this." They will not mind you. Nonsense.
That's it is. Social benefits.
Social benefits.
Other expenditure.
Other expenses. Grant and donations.
Yes, grants. Yes.
Donation. So I'll get the expenditure one. Is that all?
Yes, please.
Now let's pick the figures. Someone should take interest, another person should take subsidy.
Social
Another person-
benefit 13,000.
Okay,
Grants
someone should take
12,000.
okay. I'll take interest.
16,000.
Other expense is 12,000. Interest is 12,000. Please, subsidies is what? Oh, give it to me.
This is 18, not 28. It's 12,000 plus 6,000, 18. The subsidy is not 28.
So subsidies is 18,000.
Yeah.
1,000, not 20.
Okay, no problem. Social benefits, what about that?
Social benefits 13,000.
So the interest is 16,000.
Grant and donation. Please, let's not fight over this. When we do it yourself, yes, it's true. Any 18.
The interest 16,000.
Interest is 16,000. Okay. But so grants and other expenses. Okay. Interest 16,000. Good. Grants and other expenses. Yes, it's 12,000. Please, have you selected everything? Have you chosen everything?
Yes.
Yeah, so far.
Social benefits 13,000. I don't remember writing social benefits, but I've written it. Now look at something, please. Please open your eyes. Look at something. You see the same thing. Just that there's no need for you to write revenue and expenses. How do I know the expenses? Revenue is cash inflow. Don't put it in brackets. Revenue is cash inflow. So this is cash inflow. I'll not put it in brackets. I'll not put it in brackets. I'll not put it in brackets. Because it is cash what? Inflow. Cash is coming into the company. Can you see that? Cash inflow. Compensation. You are paying cash out. So this is cash outflow. Put it in brackets. Cash outflow. Cash outflow. Cash outflow. Cash outflow. Cash outflow. Cash outflow. Cash is going out. Can you see the cash is going out? Good. So this will give us our total so right, net cash from operating activity. When you add everything, I'm supposed to get 15,000. I'm done.
Yeah, 15.
So me, I'm not a magician, but I have to be a prophet. You see, everything I say comes to pass. I don't know why. Okay, let's go. Next one. So you're done with the what? Operating activity. Now let's go to what? Investing activity. Now, investing activity is simple. Investing activity relates to what? How the entities you invest the company's resources into. Are you okay? Basically, it has to do with what? Assets. We invest in assets, both non-current and what? Current assets. Are you okay? The company invests in what? Non-current assets and assets. Non-current assets and current assets, as well as what? Equity or investment. This is where the company invests money. So when a company gives a staff a loan, when a company gives a staff a loan, the company has invested its money in the staff. It will collect it back with interest. So giving money to staff is a what? It's an investing activity. Collecting the money back is also a cash flow, right? So if I give it to you, cash is going out. If I collect the money, cash is coming in. Do you see that? If I put money in any investment, whether financial investment or not, it is also what? An investing activity. So please, if you go to the question or trial balance, just look out for what? Assets and equity. Those elements are what you call what?
Investing
activity. So let's go quickly. Look at this one. Recoveries of loans and advances. It means you are collecting the loans and advances.
Inflow.
So recovery, cash is coming into the company. Recovery. Look at this one. Domestic borrowing. Domestic borrowing is a non-current liability. It's a liability. It's a liability. So that one will not come here. I said asset and what? Equity. Look at this one. Domestic borrowing, external borrowing. Let's put that aside. Come here. Payment for property, plant, and equipment. You are paying. You see it. So over here, you are paying. It means it's happening in the current year. So in fact, let's quickly write it. Payment of property, plant, and equipment. PP, investment. You are paying. You are paying. How much? 18,000. Cash is going out. Cash is going out. When you buy an asset, even though the asset is coming in, you are not looking at the asset. It is cash flow. Cash is the one going out. So brackets. So says Stephen, why didn't you treat these assets? Because they are all opening balances. We didn't buy them in the current year. And the current cash flow statement. So I'll not bring it. Good. But I'll write this one because they say paying. It means I paid in the current year. Go to the next one. Payment for infrastructure during the year, Ebrofo. Infrastructure is also what? EP, so infrastructure. If you want vigorous revision that will not joke. Join SMB. Why should I even ask you to join SMB? I know you join SMB now. Payment of external borrowing during the year. Payment, repayment of external borrowing. Repayment. What are you doing? You are paying external borrowing. So external borrowing is a financing activity. It's a liability. So you don't treat it here. You see, all assets goes to investment activity. Investment goes to investing activity. Next one. Loans and advances granted during the year. You give loan and advances. Advances. Advances mean short term. So advances will go to current assets, right? So therefore, if I invest in it, I'll come here loans and advances. Financial investments during the year. Financial. So got your equity or investments. Cash is going out. Okay, so I think I'm done here. Now let's come here. You say what? Recoveries from loans and advances. So recoveries, cash is coming in. Cash is coming in. Okay. So at the end of the day, I can say I'm done because the rest remain will be coming out my financing activity. You okay? Good. So please kindly add them for me.
52.
So right, next cash.
Negative 8,000.
From investing. Here's what you get.
52.
8,000.
52,000.
Madam, only this one. This negative, this negative, this negative, the negative plus this is negative 52,000. That's so good. That's so good. That's so good. Hey, I didn't anything. So simple like that. No wonder they don't like bringing it. Let's be ready for anything. I'll not say because they've not been bringing it, so I'll not teach it. Let me teach it. If you go and it comes, if it doesn't come to you know it. How can you be a chartered accountant without knowing how to pay cash flow? You got one to an accountant. But let's go. Domestic. So this one, domestic borrowing. You see, it's a liability. So therefore, sent to financing activity. I told you. So domestic borrowing. $30K. So when you borrow, does the money come in or the money goes out? When you go and borrow money,
So
does the
the
money
domestic is 20,000. Is the external borrowing that is 30,000.
Oh, okay. So this is 20,000. Please, when you borrow, does the money come in or the money goes out?
It comes in.
So don't put it in brackets, right? Okay, what about external? External borrowing. External borrowing. 3,000. This one to the money what comes in. So I've exhausted this too. Good.
Hello, sir.
Okay, look at this 10,000. Look at this 10,000. Repayment. So this 10,000 is
Yeah.
standing out. That's why I like canceling my work, right?
Yeah.
It's not standing out. 10,000. Repayment of what? External borrowing. Repayment of external borrowing. So right, repayments. Now, when you repay the loan, what happens? The cash goes out. Is that also?
Yes.
So put it in brackets.
Hello,
So,
sir.
yes, madam.
I've gotten the understanding with either putting it in brackets or not, but can you also say that if it's at the credit side, it's not in brackets, and if it's at the debit side, it's in brackets?
Madam, usually, cash flow statement will come in a one lungo line. Madam, are you okay? Madam, are you
Yes,
okay?
sir. Yes, sir.
For cash flow, usually they'll put it under what? In one lungo line. I see. That's what they'll do for you. They'll not do it this way. You understand? That's why I want you to understand it. So, madam, under what circumstance will you put it in brackets?
When the cash is leaving, is going
Perfect.
out.
When cash is going out or cash outflow. Thank you. And when cash is coming in or cash inflow, you don't put it in bracket. True of us.
True.
Perfect. So I don't want you to rely on debit or credit. I want you to know or understand it. Okay. God bless
Yes,
you. God bless you. God bless you. Good. So please, you get what? 50 minus 10. You get what?
40,000.
Thank you. 40,000. Good. Asam. Agbena. That's all. Agbena. That's all. Cash flow. That's it. Very cash flow. So when you finish, you just write total cash flow. Add all. The first one was what? Please add the total cash flow. The first one was what?
15,000.
15,000 positive.
Yeah, positive. 52,000 negative.
52,000.
And then 40,000, which will give you 3,000.
So now you get 3,000. I've adjusted this question a bit. Yes, madam.
Confirm, sir, confirm, please. Confirm the operating
Kindly
activities.
scroll up for me under the operating. I want to check something because like I'm getting different figures.
Yes, it's true.
I had 13,000.
You had 13,000. Who else had 13,000?
Please, can I see the figure for the goods and services? The workings for the goods and services. 15, 12, 10, 8. Okay, so thank you. I think I missed something.
Perfect. Please, the one who got 13,000, you also make something. Please go and look through it. But because you're a man, I'll not show it to you. I'll not have time for you. No sex.
Man do man. Waiting man.
Okay, good. So this is the total of all the balances. Are you okay? Operating plus financing plus investing. You get 3,000. You can also, now when you finish, you just add cash. Beginning. Cash at beginning. Are you okay? Cash at beginning. What are the cash at beginning? David. Cash and bank balance as at 31st December 2023. So 2023 becomes the opening balance for current year. This is for 2024 trial balance. But they've giving us cash and bank balance as at 31st December 2023. So if it is 2023 there, then it will be the opening balance for 2024. 12 was true. So 5,000. When you add or get 8,000, this 8,000 becomes your what? Your closing balance. Please look at something. You see, I did some cleaning here, so just for you to let's adjust it together so that when you are learning, so you understand what you did. So this is direct tax. Licensing. This is indirect tax, right? Workings. Okay, good. So that's actually it. Ladies and gentlemen, cash flow. This is cash flow. Nothing difficult. Can you see that? Cash flow is never difficult. Never. It's always like this.
Yeah.
Yes, please.
Please, I have a question. So, assuming you are giving the closing cash and cash equivalent, does the difference between the total cash flow and the closing balance automatically becomes your cash at beginning, or there's a way of solving it before you get there?
Repeat the question and take it one after the other.
Assuming you are
Please, I'll share
giving,
the board with you. Please.
assuming you are giving the closing balance or the cash at end to, let's say, 8,000, does the cash at beginning automatically becomes the difference between the total cash and the closing balance, or there's a way you can solve it to get it and put
Thank
it
you
down?
so much. Thank you so much. I love the question. So please pair the question as it starts. Let us take a scenario on that. So let's assume, right? We are taking it from here. We got total cash. That is from operating plus investing plus financing. I mean, we got 3,000. Is that not so? That is true. Let's assume that the question in the trial balance, the question gave us the closing balance of cash. Let's say this is the closing balance. So here we wrote, please pay attention. Over here, this is it. So they said cash and cash balance as at 31st December 2024. Cash and cash balance as at 31st December 2024. This is what the question gave us. 5,000. But it's the closing balance for the current trial balance. This is 2024. So cash and cash balance for 2024. So all right. Opening balance of cash. Which this is what they always give you. But sometimes they do not give you opening balance of cash. Do not give you that one, but rather they'll give you closing balance of cash. 5,000. Give us closing balance of cash. You are to find the opening balance. Obviously, opening balance will be 3,000. But can I say that?
Yes, please.
I see that.
Yes.
So the closing balance, if they give you here, cash and cash balance as at the end of the year for that particular period. I hope I'm recording. Please, 1 second, eh? 1 second. Sound properly. Please, do you understand? The cash and cash balance, usually they'll give you cash and cash balance on 1st December, no, 1st January 2024. If they give you cash and cash balance on 1st January 2024, then that's the opening balance of cash. When you get it, come and put it here, bang, or they can decide to give you cash and cash balance as at 31st December 2023. That will become your opening balance for the current year. That one will be there. Or they can decide to give you cash and cash balance at the end of the current year. If they give it to you at the end of the current year, come and put it here. Closing balance of cash, because you already know your total cash from the current year. The middle one become your opening balance. So try this for this. Nothing like that. Are you okay? Just understand it. Usually I do not even ask you that. However, it comes after. Yes, ask the question.
Okay, so just to add on to what my colleague asked, you know, because we are students and we are not even sure of the total cash figure we have, and we have been given the closing balance. You see, if we are sure, then like we can say, oh, then the opening cash is this. But because we are not too sure, we want to know if there is a way we can now work the opening cash. Then we can now say that, okay, then the total cash we got or we had is right. Because then if you are not sure.
Okay, good. I get you. If you're not sure of your total cash transaction for the year, you obviously get the opening cash wrong. Is that not the case?
Yes.
So please, IC will always give you the opening balance. They'll always give you. Look in the footnotes. So this question, they gave us the closing balance and they gave us the opening balance as well. The opening balance is cash in hand plus bank cash in bank. The opening balance. So if in the trial balance, you see, if other, let's say, footnote, you see cash at 1st January 2024 is 9,000. And you have bank of 2,000. Then what is total cash? The total cash is what? 11,000. You have to add bank to cash for you to get your opening balance. Are you okay? Because the money in bank is also for you. It's also cash. Yeah, that you deposited part in the bank. Are you okay? So if you, in order for you to get your cash, add cash at the beginning, add cash and bank together. I mean, bank two is treated as cash. So add the two together. If you see the bank to be bank overdraft, assuming you have bank overdraft of 2,000, put this in brackets, add the two, you get 7,000 to the opening balance. Are you okay? Please, there's no way you can do workings to get cash. No. Are you working in the company? What working? No. There's no way you can do working to get your opening balance of cash. Are you okay? That one, no. So please, they always give it to you. Always give it to you. Opening balance of cash should always be given. Are you okay? In case they don't give it to you and they give you the closing balance. Be very sure. Be very, very sure. If they give you the closing balance, just apply the total cash for the period from the closing balance. And please, we are not sure. We are not sure. You have to be sure. Thank you so much. This brings us to the end of today's class. I mean, brings us to the end of cash flow statements, right? Good. Any question?
Hello, sir.
Yes, please.
Please also, do we incorporate the notes just as we do with the financial performance and financial
Perfect. God bless you for that. Please, with cash flow, the policies of the company is not really necessary. Are you okay? Now, madam, this thing we've done, they are all notes. This is note 1, note 2, note 3, note 4, note 5, note 6, note 7, note 8. So if you like, you can include it. You can write as part of a solution. You write notes. Note 1, note 2, note 3, note 4, note 5, note 6. Madam, what you say?
Yes.
The policies. This financial statement is prepared using nonsense. It's not really necessary. Are you okay? That's cash.
Yes.
Okay.
Yes, this is cash.
Any
Hello,
question?
sir.
Yes, madam.
So I missed where we got the cash at beginning from. If you could kindly
cash
assist
at
me with
beginning.
that.
It's simple. It's here. There's it. It's not anything you should struggle ahead over. There's it. Cash and bank balance as at 31st December. But the question, I adjusted this question and I changed this one to 2023.
Okay.
They can do something like this. Cash and bank balance as at 31st December 2023. It will become your opening balance for the current year.
Okay.
That's what I did. Thank you so much.
Thank you.
Hey, this madam, she knows the thing. She knows the thing.
Sir.
But she will intentionally ask you to test you. You see? Open. Okay, good. Yes, madam. Boss. Yes, boss.
Sir, please, with regards to the note to the financial statement, last diet marking scheme, when it came, in the requirement, it was not part. So in their recommendation, they highlighted most of the students were wasting time on the note. But as we've been doing, we do that to earn marks. I don't know whether if it is not in the requirement, you shouldn't waste time to add it.
Okay, good. Thank you so much. It's a very good question. Please, like I've been telling you, okay, whether it is a requirement or not, just write a minimum of 3 notes. How many seconds will it take you? You see, that's why we are practicing it. Don't go waste there and write a beautiful handwriting. Just 3 seconds. You can write this financial statement is prepared. Don't mind them who just do the normal thing. My boss, are you okay? Just that they say you shouldn't waste so much time there. but it is a
Okay.
requirement. It is always a requirement.
Okay, sir.
Once you have prepared financial statement, let the person reading to know. But don't go waste so much time.
Okay, sir.
You get it?
When
Just don't waste time. Be writing it anytime I learn it. So it will get to a time. You use like 1 second to write all the three. Just write the first one. This financial statement is prepared using accrual basis of accounting. It's also prepared following the IPSAS standards, and assets is depreciated on this basis. Full stop. Inventory, don't write it. Just this three. How depreciation is done, accrual basis, and even accrual basis and the IPSAS, you can combine the two so that they become one note. You move on. Don't go and waste time. It's all about time.
Well noted. Thank you.
Very well. You're welcome. So please, this brings us to the end of cash flow. Very simple. Sub questions. Sub questions. We'll solve plenty questions on the first day of intervention. The intervention day 1. We'll solve plenty questions on financial statements, making sure that we have covered all areas so that when you go to the examination hall, no matter the footnote that comes, you have an idea about it. I know I've treated a lot of questions with you, but we'll do even more. Okay. Thank you so much. Okay, good. The battery seems running off. Okay, good. So that is that, I will leave you to read your theories. You know, systemic loss theory a lot. Let me see if I can get one theory. Search out from where. Search out from. Oh, let me leave you to go and revise yourselves. Okay.
Hello, sir. Good morning.
Yes, good morning.
Please, Flo, will there be a situation where you'll be giving some footnote for adjustment?
Usually they will give you a footnote if they want you to merge. If the question will be like 1, prepare statement of financial performance. 2, prepare cash flow. Are you okay? There can be a situation like that. Be open to anything. Now, if they give you a footnote, let's make sure that it's only cash related transaction that will go to cash flow. So in a footnote, they could have put in those assets we saw in the question. You see, in the question, the beginning, they brought some assets, beginning. They can put it in a footnote just to confuse you. But you should know that if you didn't buy them in the current year, if they tell you that some of the inventory was remained, closing stock of inventory is 5,000, know that it's not affect the cash flow. Because with cash flow, once you have bought it, you have to record it. Don't say because some of the inventory is remained, so I'm going to deduct it from it. Madam, what's your answer?
Yes, sir.
So remember we did the first one, that we did some adjustments. That is how it can come. In worst case scenario, if there's a prepayment, once you have paid, you record it. Prepayment, once you have paid, you record it. That's cash flow. If there's owing, you don't record it in cash flow. If there is owing, like they say, they paid NAPCO staff, but it has not been captured, you don't go and add it to the cash flow. No. So that's how it can come. Thank you so much. Ladies and gentlemen,
come again, sir.
Come again?
Yeah, the explanation just concerning the
explanation.
payment.
I said the footnote relating to cash flow. Footnote relating to cash flow. This is what can come. Owing, know how to treat owing. Please, when I prepare statement of financial performance and there's owing or outstanding, what do you do? Let's say they've not paid a staff. You have to add it to the expenditure.
Add and go to payables and also.
Exactly. I'm talking about statement of financial performance. Statement of financial performance. If there's owing, you have to go and add it to the expenditure line item. Is that also? So, for instance, if they didn't pay interest, you have to go and add the interest to it. So I send it to payables. Is that also? Yes. But in cash flow, you ask yourself, in cash flow, if there's owing, have you actually paid it? No. So in cash flow, you don't add it to interest. If you're paying cash flow, you don't add it because you are owing. If you're owing, you've not paid. By a statement of financial performance, you add it. But in cash flow, you don't add it because owing, you've not paid. So that is one about owing. Then when there's advance, you have made advance payment. You have made what? Advance payment. If it is cash flow, you don't what? Subtract. Because you have made advance payment for next year. So I'm going to subtract it for cash flow. That once you have paid cash, you have paid cash. You don't go and subtract that. Oh, the cash does not relate to this year. Nonsense. Did the cash go out? Yes. You paid it. So once you have paid it, don't go and subtract it. That is cash flow. The logic is that you have paid cash, full stop. But if it is statement of financial performance and you have made advance payment, go and subtract the advance payment and send to current assets. But here, you don't do that. So that is one thing you have to know. If there is inventory, closing inventory, closing inventory is subtracted from goods and services in the understatement of financial performance. True or false? True. But in cash flow, if there's a closing inventory, you don't subtract. You ignore the closing inventory. You don't adjust for closing inventory. Why? Because you have bought the inventory for the year. Once you have bought the inventory for the year, don't come and subtract it again. Once you bought it, cash went out. So if there's closing inventory, don't adjust. And also take note of assets that are opening balances. If asset is opening balance, you didn't buy the assets for the current year. So don't treat it as a cash flow transaction. My boss that said I should go over. Are you okay now?
Yes, please. Thank you very much.
You're welcome. So this brings us to the end of cash flow. Thank you so much. Stop.